Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about very interesting topic which is very much prevalent nowadays in the business magazine, which is that the monetization of the national debt and dividends to Government of India by Reserve Bank of India. As you understand that nowadays banking is currently in the news because of the Deutsche Bank, because of the Commerce Bank, because of the Wells Fargo. If you carefully see that the banking is in news for all negative reason, and unfortunately central banks across the globe are pressing hard on the monetization of the national debt, and perfect example is the Central Bank of Tokyo, Kuroda. As for the fresh definition of the Kuroda, there is still a lot of room for quantitative easing in Tokyo, which is a very strange statement. So from the last 20 years they are doing the quantitative easing, and now they are again planning to do the quantitative easing. I'm not sure exactly what they willing to do, but nonetheless, when it comes to the Asian economies, central banks trying very hard to live up to the occasion, and predominantly of them is Monetary Authority of Singapore. And today is also a very important day, which being the night of on the eve of 1st October 2016, when Chinese currency, which is Chinese yuan, said to be a part of SDR, special drawing rights, and this is going to be beautiful. They are going to join four big currencies, which is USD, Euro, GBP and Japanese yen. An approximate share of Chinese yuan would be 10.2 or roughly I think 10.2 or 10.9%, something like this. In that regards, the Central Bank of India is also doing a lot of activity, and unfortunately that is something which is not in the media. So what this Central Bank of India is doing, Central Bank of India is playing a key part in India. There is no doubt about that. They are trying to maintain the inflation. Of course, there are a lot of disagreements on the inflation numbers which they are giving in the market, because even as per me also, the inflation in India is not 4 to 5%. It is more than 15%. But nonetheless, they are giving that figures in the market, and based upon that, the yield curve moves up and down. And if you carefully see that 10-year yield curve is currently trading approximately 6.8 to 6.9%, which is very low versus the last 2-3 months of roughly 7.3 to 7.4%. Yes, yields are coming down, and there are a lot of expectation that Reserve Bank of India will cut the interest rate, so the repo rate will come down and more pressure on the yield. We clearly need to see how the transmission mechanism of the monetary policy would work. But before, except all these, Reserve Bank is also playing a strategic part in terms of creating dividends for Government of India. So you must be surprising that how Reserve Bank of India is creating a dividends for Government of India. This is how they are doing. As we understand that Reserve Bank of India is having the complete right to print the money. They have no control over the printing the money, and this is exactly what Reserve Bank did during Raghuram Rajan. So Reserve Bank printed a huge amount of money, and from this huge amount of money they earned a huge amount of interest income. Now how did they earn that we are going to explain to you. Now when Reserve Bank of India printed a huge amount of money, what they did, they invested this money in government securities. Like you can see, RBI is having two strategic desks. One is RBI FX desk, one is RBI fixed income desk. Now foreign exchange desk is taking care of all foreign exchange movement of Reserve Bank of India, which we shortly known as sterilization. So you will buy dollars and you will sell government securities, and you will sell dollars, you will buy government securities. So FX desk is continuously working for Reserve Bank of India. Shortly in newspapers we term this as an intervention done by Reserve Bank of India. So sometimes they do full intervention, which is shortly known as sterilization. Sometimes they do semi-intervention, which is shortly known as not complete sterilization. But intervention is something they are doing, and they are very much interested in doing intervention, because they don't want to keep the currencies, keep INR afloat. As simple as that. So we have two desks of RBI who's consistently working, RBI FX desk and RBI fixed income desk, which goes as per the instruction by Reserve Bank of India. So what RBI doing? RBI is printing the money, whereby RBI buy the government security or strategic FX assets across the globe. Now you all know that Government of India is borrowing approximately gross approximately 600,000 crores rupees of government debt from the market every year. This covers your treasury bill, treasury bond, treasury notes and other. But what exactly RBI is doing? RBI is printing the money and buying the government debt. In that they are serving two purposes. Number one, we know that the purchasing power of India is getting down. People are not interested in buying the government debt. The yields are coming down. So for a primary dealer who was getting roughly 7.5% on a 10-year government security few months ago, the same gentleman is getting 6.8% now. So he lost approximately 70 bips. Yields would come down. All the funds like income funds, duration funds, liquid fund, liquid plus funds, all the yields will get down. So of course he might not be more interested. He is interested in arbitrage funds, wherein he can make the arbitrage, or he would be interested in having slightly higher yield than the government. So what RBI is doing, they're printing the money, as they have the right to print unlimited money, and they are buying the government securities. Now this buying of government securities is decided by the RBI fixed income desk. They will decide whether they want to invest in a treasury bill, they want to invest in a treasury bond, or they want to invest in a treasury note. Note means 10 years, treasury bill means 0 to 1 year, which is a discounted instrument, and treasury bond means 10 years to 30 years. Now after this, RBI is earning a yield on all such assets purchased across the globe, and what they are doing, which in turn they are creating an inflation in an economy, which is known as financial inflation. Unfortunately, people are not getting the meaning of financial inflation. Point is very simple. Who is printing the money? Reserve Bank of India. Who is investing the money? FX desk or the fixed income desk of Reserve Bank of India. Who is generating inflation? Reserve Bank of India. Who is computing inflation? Reserve Bank of India. So whatever inflation Reserve Bank is giving to the people or the media, they are accepting that. We never understand that, since the printing of huge amount of money in turn creates a financial inflation for the country, and this is what RBI is doing, which is shortly known as monetization of the national debt. But this activity may not hold on for a future period of time or for a longer period of time. There is a reason to it. We know that currently majority of the countries of the globe are having negative interest rate policy, which is Japanese, which is Swiss, which is Europe. They have the negative interest rate policy. So very less countries are left who are having positive carry. Now what do you mean by positive carry? Like Canada offering 2% on 10 years, Australia offering 1.5%, India still offering 6.5%, 6.8 on 10 years, Indonesia offering approximately 7%. So the scope of carry is very limited now, right? So in that, there are not much avenues which are left with Reserve Bank of India to invest, this printing of money. And at the same time, Reserve Bank of India need to take a conscious call. Now what conscious call they need to take? Now today, tomorrow, yuan will be a part of SDR. I know as per the research reports are available that majority of the countries in the portfolio managers already diversified their portfolio in yuan, and approximately in the next 10 years they will get $1 trillion of inflow in the country, right? And approximately $41 billion of SDR. RBI needs to take a call whether they wanted to invest in a yuan denominated bonds or not, because still 10 years Chinese government securities is offering approximately 2.5% something, which is a better return. Now once they print the money, they bought these assets across the globe, there is an increased probability of inflation in the country, which they are not showing because they calculated by WPI and CPI, which is worthless indicators. This all can be proved via this table. In fiscal year 2008, RBI transferred 15,000 crores of surplus money to Government of India, in which is 15% of the revenue. In fiscal year 2009, RBI transferred 25,000 crore, which is 25% of the revenue. In fiscal year 2010, 18,000 crore. If we move straight, in fiscal year 16, RBI transferred 66,000 crore, which is 20% of the non-tax revenue the government is accumulating in a year. So you can very well understand that if per rupee is generating 9%, or say per 100 rupees generating 9 rupee, and you are distributing in the fiscal year 2016 approximately 66,000 crore or 20% of the non-tax capital receipt for the government, and how much amount of money you printed. And all those who are watching this video is very well aware about the fact that if you continue to print the money, this all continue to be accumulated in nature. It is not that if today I print the money, this money will stay in the system for 1 year. If I continue to print the money, this money will continue to stay in the system for a longer period of time, because that printing of money would continue to happen. it will continue to accumulate the balance sheet of Reserve Bank of India, unlike your external, like your European Central Bank, Federal Reserve, and other. So this way, RBI is doing the monetization of the national debt, and unfortunately, this is something not getting reported in the media. All the numbers are reported by the live mint. And if we continue to do this, then of course, over the period, we continue to accumulate a huge amount of debt in the books of the country, and we are subject to financial inflation. And all the non-debt capital received is something, majority part is the dividend which is transferred by Reserve Bank of India on the printing of the money. So this was for the today, to update you that how Reserve Bank of India is doing the monetization of the national debt. Before winding up the video, let me summarize you that the negative interest rate policy by majority countries across the globe, it's a major factor which Reserve Bank to decide, because now the options of the carry are very limited. Plus the yuan is getting in SDR. Portfolio composition will surely change. How much yuan RBI can carry in their FX reserves, that we need to see. As simple as that. So this is something for the day. And we know that India is always have a net international investment position in negative in nature, which is the difference between FX assets and FX liabilities of the country. This was for the day. You're welcome to email us at treasuryconsultingllp@gmail.com. Our alternate email ID is rahulmagan8@gmail.com. My mobile number is 9899242978. My Skype is rahul5327. Thank you for your time and see you soon.